Hey, what's going on, guys? I hope you guys are doing well. Welcome to episode 2 of Ariel FX's Smart Money Concept videos. I feel like I want to go over just a few pairs that really displays how institutional trading works, or how exactly here at Ariel FX how we trade, and how it's so prominent in the markets, and how it's so um, honestly quite easy to identify and to understand. So most of you, you've taken courses, you've had mentors that have been teaching you, and they tell you certain things about the market, and they try to explain certain things about what price is doing, but do they really explain why it does it? All right, so here it's exactly why institutional trading works and why they do it, why these big banks, why these market makers move price to certain levels, all right, and how you as a trader can take advantage of this. All right, so I want to go over three pairs with you today on this episode. And I want to first dive into NZD CAD. So the first thing we want to do is we want to do a top-down analysis of this pair. Okay, so what I'm noticing is that NZD CAD on the weekly time frame, we are trading in a bearish market. Okay, this is highlighted by this trend line here. Okay, here at Ariel FX, we do not trade trend lines. We simply use them for structure purposes. Okay, but you can notice that we are making lower lows and lower highs here. All right, now you can see that we made equal lows here. All right, so obviously you know that equal lows, if you know anything about smart money, is that there is tons of liquidity resting below these lows here. All right, liquidity meaning retail traders stop losses. So what do the institutions want to do? How do they make money? Well, if you watch the first episode, you know that equal lows and equal highs represent liquidity, and the institutions take their money via liquidity purges, which is what you see here. Okay, so there's so many retail trading stop losses or money below this level. Okay, equal lows, because people tend to buy at support, all right, and sell at resistance. That's the retail trader mindset, and we do not trade retail trader style. All right, so we knew that price was going to take out this level. All right, which we did here. We had this level that was taken out, and then with this next week's candle, a huge bullish candle, right, indicating that momentum has shifted from the bears to the bulls. We took the liquidity, and now we're getting the hell out of there. That's really what it is. They take the liquidity and get the hell out of there. That's what they do. All right. Now we scale down. What's going on in the here and now? The daily time frame. You can see that we still are in a bearish market. However, since I did notice that we did take out this level and we are reacting quite nicely, we could be in for a full-scale reversal, meaning break of the structure up here to go long. All right, but we're not quite certain of that yet. Even though we do have a good indication that price is starting to react off of this level, we want to take into consideration the previous swing point, just in case we come up to it and make a new low. All right, that's still a possibility just because we still are in a bearish market. All right, so what can we notice? We notice that price has made a low, made a high, made a lower low, took the liquidity, and now we're looking at making a new lower high. All right, so now what we want to do is we want to scale in to what's going on in here, because although this could just be a pullback, a higher time frame pullback to go short, this is a lower time frame trend. All right, so now we want to scale in to see what's going on here. So if I scale into the 4-hour time frame, and let's start back in here. Okay, I'll go over all of this in a little bit because all of this should make sense when we get or after we start talking about what's going on in here. Okay, because you have to know exactly what's going on in this whole entire trend to be able to understand where and when you should be placing entries. All right, this is very important. So you have to realize, where is the mitigation occurring? Where are the inefficiencies? What structure point do we need to take out? And what structure point do we need to react from in order to continue with the trend? All right, so there are multiple ways of trading with smart money. All right, one, you can trade via mitigation, which is a sponsor candle coming out to mitigate out of positions to continue in the direction of trend. You can fill an inefficiency or imbalance in the market, and I'll be going over all of that in a little bit. Or if you're not quite sure where exactly to enter, as in where the market will reverse if there's no clear mitigation point or inefficiency level, wait for a counter trend break of structure and retest. And I'll go through over all of this here in a little bit. Okay, so as you can see, there are no inefficiencies in here. All right, in this huge bullish move, there are no inefficiencies. All right, price has come down and filled every single wick All right, every single wick has been filled. All right, so we don't need to worry about anything in here. All right, we see this pullback. All right, now we make a new high. All right, now we want to scale into this last point in here. All right, because this is where we're going to be taking our trade. All right, now if we don't find anything in here, obviously we're not going to be taking a trade. We could be looking for some counter trend break, and then pull back to go long if we don't find anything in here. But if we do, then we can take this trade. Now let's say there was some sort of sponsor candle in this price region or some inefficiency. All right, if price makes a new high, we're not worried about price coming back down to fill that imbalance or sponsor candle. We have to react off of structure. That's the most important thing, is structure. There could be something in this level, which there's not, but let's say there is. If there was, okay, we would still not be looking for price to come down to fill that, because we have to respect structure. We have to react off of something in here. All right, because if we do break, we will be breaking structure, and it will be a reversal back to the downside. All right, but we're not looking at doing that right now. Okay, so let's scale in to our last point of return. All right, because this is the lowest price that we can be buying before structure breaks. All right, this is where the institutions will be buying, because they want to get in at the most discounted price. All right, people want to be buying at a discount and selling at a premium. All right, buying at a discount, selling at a premium. All right, if we are in a bear market. In this case, we're in a bull market, so we should not be selling at this level. Anyways, scaling down. Okay, going to the 4, to back down to the 3. I don't see much here. All right, there's no sponsor candle. Sponsor candles, this is not a sponsor candle. All right, this never took liquidity. Never took liquidity, and this more wick than there were body. All right, not a sponsor candle. Keep going. 2-hour time frame. Let's scale into this. As you can see, now we have an inefficient pricing. All right, yes, this could be a sponsor candle because it's more body, and then we had a violent move back to the upside, but I'm not looking to have a 60, 70 pip stop loss. This is not how we do it. Now, what you can notice is that we have inefficiency between this wick and this wick. So there's inefficient pricing in here. The price needs to come back and fill. And look what we got. If I move this over, you can see that we came down and hit that inefficiency to the T. Now, you're thinking, well, where would you place your stops? If you entered right in here, let's say the 50% of that imbalance, you'd have to place your stops below here, below the body of this red last candle. All right, that's about 40 pips, and 40 pips is not the best. Okay, so now let's say you don't know if it's going to reject from this level, or you simply just don't want a 40 pip stop loss. What can you do? Well, there's multiple ways of trading it, as I mentioned before. You can wait for a counter trend break of structure. All right, so wait for price to stop. All right, in your level of interest, scale into a lower time frame, and wait for price to break structure. And this is what I mean by counter trend structure. This is your counter trend. Okay, so you had a lower low, a lower high. All right, lower low, lower high, lower low. Okay, so this high right here created this low. So we have to break this high first before we can consider ourselves bullish again, right? If not, we would simply do this. We would simply come up here, create a lower high, and continue with the trend, just like this. All right, so this is why we have to wait for this structure to break first, if we're not quite sure about entering here. All right, so now we scale in. 1 hour time frame. We got the reaction, all right, and this is where we closed on that Friday, April 3rd, or April 20th, or excuse me, April 3rd, 2020. We did not break this high with this. Okay, we came down and we filled this inefficiency, or filled this gap. All right, we filled that. Then we made a new high. Okay, we broke this high now. This high that created this low has been broken. Now we can consider ourselves bullish now to make another leg to the upside. But we don't want to be entering at this premium price. We want to be entering at a discount. We want to be buying at discounts. We wait for the pullback. Okay, and now this is where we scale in even more. Or we can zoom out to see if there's anything else that piques our interest. And in this case, there is. It's inefficiency. All right, I'll just highlight with this. All right, inefficiency. Didn't quite come down and fill this inefficiency, so we don't enter. We wait for it to do that. And if it doesn't and it breaks structure and continues, we just simply don't enter. All right, we have to be disciplined in our trading now. Comes up, comes back down, fills the inefficiency, you enter here. Okay, now you know to enter here, and you don't wait for any more counter trend breaks of structure. You know why? Because now that we have confirmed that we are reacting from this level, our last point of return on this pullback, we have broken counter trend structure, and we have tested our last point of return here, because we're not coming lower because we already filled this, this is exactly where you enter. You place your limit and you let it go. All right? That's one entry, two entries possible. All right? Now let's zoom out. Let's see what's going on. All right, we always want to follow structure. So now, we made a high, we made a low, we made a higher high, we made a higher low. What are we expecting? A higher high, okay? As you can see, we never made a higher high. We will eventually, but in this case, not right now. So where would your first targets be? Your first target would be equal highs, and then you want to scale out to find an overall higher high target, which I have identified on the, I believe it's the weekly, no, it's the daily time frame. At this last buy before the sell, so this sponsor candle that was never mitigated from, around psychological level 0.86000. Institutions love trading from these levels. All right, so that's what you would target on your first entry, whether it be here or in here where we had our second entry. Okay, that's where you would target the higher high. Let's see if we have any other confluence with that. Maybe we pull a fib. All right, usually you'd like to see the negative 27 or the negative 61 line up with your level of interest. In this case, it did not. Okay, but that's still okay. You still want to be targeting this level in here. If it goes a little bit higher, we might reach the negative 27, all right, which is okay. But anyways, that would be your target from an entry here or in here. Now, where's our next point of return? Right in here. Okay, so you can see on a higher time frame, we're making higher highs and higher lows. Higher high, higher low. All right, now we want to make a higher high on a higher time frame, but on a lower time frame, we could be trending. So, as you can see, this is your leg to the upside. This is your leg to the upside. It's an extended leg, but it's a leg. But in the meantime, this could be a lower time frame trend for a higher time frame leg, if that makes sense. This is a lower time frame trend for a higher time frame leg to the downside for a pullback. Okay, so as you can see, you have to follow each time frame structure, all right, to identify your next move. So now, where do we need to react from next? All right, we reacted from here. Now we need to react from here to continue with the trend. All right, so this huge leg to the upside. So we want to be scaling into something in here. All right, whether that be the 2 hour, the 3 hour, whatever that may be. Let's see what we can find. All right, this sponsor candle in here was mitigated here, but we do have inefficient pricing right in here. But that's not very clear. Let's see if we can find something else. Maybe the 3 hour. Okay, perfect. Great. This sponsor candle here, sell to buy, was never mitigated from. That would be your last point of return. Yes, we do have inefficiency in here, but the last point of return will be within this last sell to buy candle. You would place your limit right there. And guess where it hit? Again, to the T. Now, let's say again, you're not quite sure if it's going to react off this level. Higher chance than not, it will, because this is our last point of return before going short. And I mean by breaking structure and continuing to the downside. But we're not continuing to the upside. This is the trend. So if you didn't place a limit here, let's just say you missed it. What did I tell you to do before? Wait for a higher or lower time frame, break of structure, counter trend. Now I'm not going to draw a trend line here because it's very weird. I mean, I guess I could. So let's see. Let's find out. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. We have to break this structure now because this created this low. All right. So let's just mark this off with a little rectangle. So that's where we need to break. Right, now we scale in. Perfect. We broke it with this. We closed above the closure of this. And I'll just mark it off with a little horizontal ray here. We have to close above the closure of these bodies, which we did. We closed above them. We are now breaking structure. Now we can look to pull back to go long. Right? It's just following the same process over and over and over again. So now we scale in because I'm sure there's something in this wick or potentially in here, some sort of inefficiency that we could take advantage of. 45-minute time frame. I don't see anything. 30-minute time frame. What do I find? Perfect. This last sell to buy candle. We never reached that initially, okay? So you probably wouldn't have entered. All right, we never reached this level down here. We just pull a fib from here to here. We did reach equilibrium, 50%, but I was really hoping to get back down into these discounted regions before buying. So unfortunately, there's no setup here. You could be buying somewhere in here. I mean, you'd have to suffer a little bit of drawdown if it did come back to this level, about 10 pips. But certainly you could have bought somewhere in this region because you knew it was going to make another higher high because we broke structure in the first place. And what did it do in doing so? We took out all this liquidity. All right, there's retail trading stop losses below this level. And what else did we do? We came down and we filled this imbalance here. All right, so you can see how all this is painting a picture and coming together. This is exactly how we trade. We wait for these confluences to arise, and then we execute from them. All right. So now, you didn't get into this trade. You may find some imbalance in here, okay? Because this is what we did. We made a higher high, a higher low, a higher high. You'd expect a higher low. And look, this counter trend is a retest of this counter trend, and we have imbalance in here, from this wick down to this wick, from this wick into here. And you could have entered anywhere in here to take this long again. Again, targeting equal highs or a higher high from this higher time frame extension leg to take out this high. All right, we came into that higher high region. All right, so partials would have been taken. Let me get rid of this. Now, because of this, and this is where people get messed up. All right, so when you make a higher high here, because this is a higher low, higher high, people tend to take trades off of the next swing point, which is right in here. Take a trade somewhere in here, maybe somewhere in this inefficient pricing. And you could be up, a little bit, a few pips or so. Could be up a good, 30, 40 pips. But that's not really good enough for us. That's not a trade that we should be taking. And why is that? Well, one, because not only did we break counter trend, all right, we broke counter trend, but you have to go to the higher time frame for this. When we reach a higher time frame objective, like we have in here, all right, so on a lower time frame, this is simply just a trend, but on a higher time frame, this is an extension leg up. When we reach at least equal highs, it could be equal highs or it could be a new higher high, we have to expect an overall pullback. All right, so let me just hop down to a lower time frame to show you. So you wouldn't be looking to take it off of the next swing point when we pull back to take it long again, because we reached that higher time frame swing point. We reached the equal high of the higher time frame. So you'd expect an overall pullback now, all right, but not taking out this structure, which is why when we scaled into the 30-minute, the unmitigated sponsor candle, you can see that we came down and hit that perfectly and reacted from it. All right, and you can do the same thing. If you didn't catch this, wait for the counter trend break. Here, I guess you can mark it off like this, but this is a lower low, lower high, lower low, lower high, lower low, lower high, lower low. This high created this low. All we have to do is break the structure in here, which we got with this push. Now, where do your eyes go next? Take a counter trend. Well, you like to take it somewhere in here possibly, but you can see that this sponsor candle was mitigated and there's no inefficiency. So there's nothing to react off of in here, okay? But there's inefficient pricing in here. You can see with this wick here and this wick here. So I can simply just draw my rectangle. And it's going to overlap a little bit. But you could enter anywhere in here. Again, targeting a new high or equal highs again. All right, in which we got about a nice 115 pip reaction. All right, so now let's scale back out. Where is price now? Price is now trading in this direction here. Now, we did not quite make equal highs, nor we did not make higher high. So you can still trade off of this structure in here. All right, if we did make equal highs, we would be looking for an overall pullback to somewhere down in here. All right, but we did. Now we can trade off of something in here. Let's go find it. Price came back down. And doing a deeper analysis of this, as I did prior to this video, there was nothing to be traded in here. I mean, there's a little bit of inefficiency on a lower time frame in here. But if you had have entered, you may have been in this trade, and you still might have. Place your stops below here. but maybe some of you would be taken out, and I personally would not like to have had a 30 pip stop. It's not what I like. All right, but nonetheless, we respected the structure here, and we continued up. But in the process, we created equal lows, and this is the thing. Equal lows, we already know, will be taken out. Doesn't have to be taken out immediately, but they will be taken out eventually. All right, then we finally created this new high here. All right, we finally created that higher high. So this is what I tell my students. I ask them, now, where do we pull our fib for our pullback? Okay, most people would say, oh, you just pull it from the previous low to the high. But what did I just tell you earlier? I told you that when we finally make a new higher high on a higher time frame, see, on the 4-hour time frame, because this is your higher time frame structure right in here. Higher high, higher low, higher high, all right? What point, at what low point, like what low swing point do we make this higher high, all right? We finally created this equal high here, which created this low. In a lower time frame, this is simply just a trend to create another higher high, an extension leg. So we have to pull it from here and not this low, this intermediate trends low that created this high, if that makes sense. Okay, so now we pull it from here, this low, the higher time frame low, to this higher time frame high. All right, now I would first expect price to come back down into this level, and I believe this might have been, was it a 3-hour? I believe it was a 3-hour, 50%, but it also was a lower time frame play as well. I'll just get rid of some of these lines because they're sort of confusing. You would expect price to come down and take out these equal lows here, to hit this sponsor candle in here. Well, that could definitely be the case. But let's see what price is doing right now. All right, now we want to see a pullback. On the hourly time frame, I have identified that we have created equal lows here. And when equal lows are made, they are always snatched, which we did here. But let me explain this in further detail. On the hourly time frame, I had two levels of interest. One being this last sponsor candle here, this last sell before we bought, and this inefficient pricing in here. You can see this wick and this wick. All right, there was no fill. And guess what happened? It lined up with not only psychological level in round number 84600, but the 61.8 of the larger move, the golden ratio fib. All right, so I did have two positions. I had one limit order right at this level, which got hit to the T, okay? And then one down here at my higher time frame, 50% inefficiency, or excuse me, 50% mitigation to take out these equal lows as well. All right, we reacted quite strongly off of this level, taking these equal lows in here, filling this imbalance, hitting the sponsor candle, rising, and not only did we break counter trend structure as well with this. This is the structure that made this low. All right, but we had all of these confluences. All of these were aligned together. So now what am I looking for? Now, obviously, you would say, well, I'm looking for a pullback and a mitigation off of this level. We're not expecting this to go lower down into this region yet because we have broken structure. We want to continue with the structure. So we want to continue from this low. So anywhere between this low and this high, we could be trading it. All right, so now let's scale in. Well, first, let's go over this. Why wouldn't I want to take a position at this open? Well, it already got filled. All right, but does that mean it's completely done and we're not going to come back down? Well, this is where you scale in to see if you can find a secondary entry. And the 45-minute time frame, we have clearly identified that. Okay, so this, if you watch this video soon enough, you may be able to catch this entry. Not only do we have inefficiency from this wick, because it skipped price, we had this last sell before the buy, all right, which was never mitigated. All right, the best trade to take is when you're going in the direction of trend, you take liquidity in the opposite direction, filling something, whether that be a sponsor candle or inefficiency. In this case, it was both. Hitting a fib level, breaking structure, and guess what? 1, 2, 3 touches, looking for that potential fourth touch to go higher. Now again, our overall target was that daily sponsor candle, 8,600. So that's where I'd be targeting if price comes back down into this region, that 45-minute time frame, to go long. all right, which would give us a nice 1 to 6.74 risk to reward. All right, but let's say price comes into this level first, and we already recognize that on a higher time frame on the daily, that we could still potentially be making a lower high to continue short because we are still bearish on a lower time frame. If that's the case, I still expect a reaction from this level because institutions have to mitigate their positions. They have to get out of their positions here. All right, so I do expect some price unloading, some trade unloading from this level. All right, we may not make a new high, but at least we can maybe catch some potential, a potential new entry here. All right, to take this long. All right, and we put stops at break even quite quickly. And then if we do break this low, then we'll come down and we'll take out these equal lows. I don't really expect a reaction from here anymore just because when we do break this, we might get a reaction, but it's going to be a quick one. We'll just get a reaction, a slight pullback, and then to continue short. All right, so that is NZD CAD, and I hope you can understand how structure works and how multi-time frame structure works in accordance with inefficiency fills, sponsor candles, and everything like that, okay? And remember, if you're not quite sure where or when price will mitigate or stop and start to reverse or hit an inefficiency or whatever, wait for the counter trend break as you have seen in this example here, this example here, and this example here. All right, so scale into these. Go on your chart and find these yourself and try to make sense of it if this does not make sense. So this is NZD CAD, and now I'm going to go on to Euro JPY, a trade that our members took, and our members took all of these trades earlier. This happened a few weeks ago. But our members took these, and this was actually sent out as well, so I'll give you a little freebie on this one. Look for price around 84855 to be taking this long, up to 8600. All right, 17 pip stop loss. All right, so members caught that, and our members also caught Euro JPY as well, and this happened on the 15-minute right before news last week. So we had an ECB press conference last week, and if you watched my news video on YouTube, you know that news is just an excuse to push price in the direction that it was always meant to go. All right, so you can see that in this price region, we are bearish on a higher time frame. All right, so actually let's just go to that really quick just to show you, so you get the full picture here. Okay, so news occurred in here, and it was only just a simple pullback. So it was an excuse to pull back and take all this liquidity in here to then continue the downside to the downwards trend. All right, because we are higher time frame bearish. All right, so hopefully that makes sense for you guys. But 15-minute time frame, let's scale into our entry that we took. All right, so I noticed that price, all right, created these equal lows in here, all right, and took that liquidity with this last sell before the buy. So let me just mark that off really quick. Mark that off. Now we broke structure. We broke this structure. I was hoping price would come down and mitigate. We never got that. We just continued, and we finally came back down, and we mitigated price in here. All right, and in the process, what did we create? Again, equal lows. Created equal lows, which were purged. Not only did we take this liquidity, but we mitigated this position. So now this becomes our candle of interest. We broke structure to the upside, creating a higher high. Now you want to create a higher low. Perfect. Mark it off. Sell for the buy, mitigation, go. And a little drawdown, but of course stops below the low here, and we bagged out quite nicely, as you can see. So that's really how you just follow the mitigation trail and look for these confluences. All right, a sponsor candle mitigation is not simply just the last sell before the buy, the last buy before the sell. It's not simply that. A sponsor candle is one that takes liquidity. Okay, this took liquidity, this took liquidity, and mitigates something to the left or fills some sort of inefficiency. In this case, this filled this. All right, this did not fill anything, but it did take liquidity, and we ran to the upside, breaking the structure. So that's good enough for me. This, in this case, did all three. Took liquidity, mitigated, filled inefficiency, just a tad bit of inefficiency, and broke structure to the upside. Easy pull back down, higher high, create a higher low, mitigate, go long. All right, so that's EJ. Hopefully that makes sense for you. The last one I want to go over in this episode of Smart Money Concepts is Euro USD. So Euro USD, I want to go over, and don't mind all this in here. I will actually go over all this in a minute. But let's just scale in. Actually, let me scale out so I can find it first. Let's scale in to what price is doing over here. I believe it was, yes, it was over here. Okay, so I'm not going to do a full breakdown on this. I'll actually do a full top-down analysis on USD CAD just to show you exactly what I look for on a clean chart, tap down from the monthly all the way down to the lowest time frame possible. So you guys can see exactly how I mark up charts and what I look for. But I'm not going to do it in a top-down on Euro USD. It would just take too long. But let's just take my word for it in the fact that we are pulling back on a higher time frame, pulling back to continue short. All right, so we created this base. All right, this liquidity was run, and we came down, we mitigated here. All right, I'm not going to go through everything, but just know that we made a new high, so we're expecting a higher low. All right, which we came in, and I'll just give an estimate about this structured region here. We broke out of this, we retested, now we're looking to go long. All right, so keep that in mind. Now, what do we have here? This is our last point of return. Mark it off. Sponsor candle, sell for the buy. All right, broke structure. Now we're looking to come back down and mitigate. All right, in the process, what did we do? Price always loves to create equal lows before mitigation. It tries to get people to buy. All right, tries to get people to buy. All right, but we know it has to be taken out first, which we did. We took it out, mitigate, ran to the upside, breaking this structure in here. This is our last swing point before making this low. So as long as we break this swing point, we can make a new low or a new higher low before making a new higher high. All right, so now my interest goes into these candles here, okay, because these were the candles that pushed down to mitigate this last sell to buy. All right, so now we scale in. So I'll get rid of this, and it happened, I believe, excuse me, in the 5 minute. This was on a Thursday morning. I believe, is it right here? No, it's way over here. And hopefully the data allows me to go back this far and look at it. I really hope it does. Oh, it doesn't. It doesn't allow me to. Okay, anyways, I'll go to the 15 minute and I'll show you what was going on. So on the 15-minute time frame, where was I? Oh, I believe it's over here. Yes, it's right here. Okay. So they did not allow me to go back in the 5-minute time frame too far back, but I guess I'll just tell you. But on the 5-minute time frame, I know this is the 15-minute, but on the 5-minute, in this candle here, we had a sell to buy candle, a perfect Maribozu open and closure. Maribozu is the one without a wick. This happened on the 5-minute. So I think it was 550 or 850. Yeah, so it was right. Yeah, right there. I'll just make it perfect for you. That was the open on the 5-minute, that blue line. I know this is a 15, you can't see it, but on the 5-minute it is. And we came in and we mitigated that to the T perfectly, and then we absolutely mooned from there. So you can see how powerful the smart money is, the smart money concept. All you have to do is just follow the mitigation trail, follow structure, okay? Because we are trending. We're not trending up long term. We're counter trend trading up, okay? And you can still take counter trend trading trades as long as you're following the counter trend structure. As long as you're not trading, let's go to the higher time frame here. As long as you're not trading, because we're creating lower lows, lower highs, as long as you're not trading above this last point, okay? So you can continue to pull back, so you continue to buy, pull back, buy, up until this point where then you'll be looking to sell off. All right, and the price did begin to sell off right before that, but anyways, we caught an entry in here, and we backed out quite nicely. All right, so that is EU. Actually, I'll just continue with this. Now let's go to the higher time frame play here. All right, the higher time frame. Now, when price finally came down, we didn't make a new low. All right, we did not make a new low. We created equal lows. All right, what's below equal lows? Liquidity. All right, let's just disregard this for now because that did not work out. as in it did not come to that level, which is okay. Now, this is interesting because now we took the liquidity with this push and we bolted our way up to the upside. And you would think that on a 1 hour time frame, we broke structure, right? We closed above it. Well, the higher time frame always trumps the lower time frame. So let's go to the 4 hour time frame. We did break the structure in the sense that we took the liquidity and we filled in this inefficiency on a lower time frame. Again, coming up to that level I had already indicated when we were in here. Okay, so price always comes to that level, maybe not when it's the right time to, but it always does. Not when it's supposed to, but it always does eventually. All right. So we came up into that level and we pushed down and we closed below it. So this is still bearish. All right. Even though it is long term, it is still bearish. All right. So now continue to sell off. Get rid of this now. So what do we want to look for? Well, this is our last point of return for this. Now, since we created a new high, all right, not a new high. When we did create a high, but we closed below it. But we're looking to take it off of the mitigation, not anything down here, because this is the candle that we need to get out of drawdown from, because this pushed down and ran to the upside after taking this liquidity. So my eyes go in here. And this happened to be on the 2 hour time frame. We had our last sell before the buy. All right. I was looking at this for another potential entry if we did come back down in here just because of the inefficiency, but we never made it. Had an entry in here. All right. Inefficient pricing and the last sponsor candle, last sell to buy to get out of these sell orders to then continue to buy up. All right. So we got a good entry here. Rose to the upside. Now we're starting to come back down. Okay. So why are we coming back down? Well, not only do we need a pullback to go long again, okay, but remember, there could be two possible entries for every setup. One is the mitigation to the left of the higher time frame, and two is the mitigation of the mitigation. Okay, because price needs to come back down to get out of these sell orders that were pumped into the market to get out of these sell orders. That's how mitigation works. All right, and they get out of these sell orders because they don't want to be in drawdown anymore. And this is where your mentors don't teach you exactly why this stuff happens. Not only do we teach you how to spot this, but why it happens in the first place. Okay, so not only do they push price down, they have to pump millions and millions of dollars into the market here to take out this liquidity, but they're also in drawdown. They're also in sells here. They're in sells when price is up here. They have to come down and get out of their sells. They have to break even on their sells to then continue with their longs. Okay, that's how they make money. That's exactly how it works. So now they're in drawdown on these sells here because they had to pump millions of dollars into the market to get out of these sells here. So now we have to come back down to get out of these sells to continue with the longs. All right, we had a little bit of a rebound here Friday afternoon. It's about 2:15. Market's about to close. We had a little bit of a rebound off of this level. You can see we have demand turn into supply, turn back into demand. But I do believe we're going to have a simple break, mitigation, and continue. All right, first target for this would be 1.09 because we are still bearish, and this happens to be, I believe, around the 15-minute sponsor candle here because this was our last push up because it took all this liquidity in here. All right, with this move, we never came and mitigated. So that would be our first target, somewhere around 1.09. But if we do break that, which I kind of expect it to, just because the dollar is quite bearish at the moment, for them to come back up and possibly hit either this last buy to sell or just test some equal high in here. All right, come up and test these equal highs. All right, but overall, yes, we are still bearish. The only way I would ever be buying this pair is if we break and close above this structure on the 4-hour or daily time frame. All right, so that's what I'm looking for. I don't give away too many freebies on smart money on these videos, but since these examples haven't exactly worked out, as in they haven't officially finished, as in they haven't quite came down to my level of interest yet, that gives you an opportunity to enter as well. So we had NTD-CAD and Euro USD. So that is really how we trade smart money concepts, institutionalize that style of trading. All right, if you have any questions about this, please PM us on Telegram or DM us on Instagram at Ariel__FX. That's a double underscore. All right, and then we'll be happy to answer your questions. and get you signed up for VIP to take advantage of these signals if you'd like. But before we close out of this, let me do a quick top-down analysis on USD CAD because I've been getting a lot of questions about how to really look at a clean chart and what exactly I look for. So on the monthly time frame, I always start with the monthly. All right. NZD CAD, I started on the weekly just because I didn't want to go through everything. There wasn't any need to because all the setups happen on a lower time frame. But USD CAD monthly time frame, what do I look for? Well, I look for directional bias. What are we doing? We're buying. I don't really give a crap about anything in here because this happened years ago. This happened in 2012, 2011, 08, 07. These are monthly candles. What's going on in here? But we do have to understand directional bias. We are going long. All right. So overall, we're going long. All right. Potentially coming back up into this supply zone to then potentially short or continue long. I'm not quite sure yet. That'll happen within probably the next few years or so. All right. So monthly, what happened in here? Our last few monthly candles, that's what I want to look for. We pushed price, had a strong reaction here. We had a lower time frame bearish trend, all right? But then we finally broke out of this last swing point, okay? All right, so we broke out of this last swing point. That could have potentially made a new low, but we didn't, and we failed to break this new low here. Even though we were a higher time frame bullish, we could be a lower time frame bearish. We finally broke out of that, so now we are lower time frame, especially on the weekly. This is the monthly, but on the weekly we are bullish. But we could be lower time frame bearish to pull back before going long again. What do we create? We created equal highs. Now, a lot of people have been asking me, well, what if this candle broke this and then pushed back down? As long as we broke this and broke this high here and then pushed back down and closed, then I would probably be expecting a higher time frame retracement, as in pull a fib from the low to the high, or wherever it created. Let's say it stopped right in there. All right, let's just say price wicked in there. Then we would be looking for a higher time frame pullback, probably down into some discounted region before buying up again. But we didn't. We created equal highs. All right, we never created a higher high. So now we're looking for a shorter term pullback to go long. We are above the 50 EMA. The institutions love using the 50 EMA. So be wary of that and use it as a confluence. Don't trade off of the 50 EMA. Use it as a confluence for your other rules and confluences. Hopping down to the weekly time frame, what do we see? Well, we notice that price finally broke out of this kind of counter trend, all right, and broke the structure in here. But what else do we have? We have a gap that has yet to been filled, all right? We have a gap. Now let's pull this down to where it closed. A gap into there, all right? But let's say price is looking quite strong. Next week we start to push back up. Are we going to go long from here and take this out? Well, we have to at least reach equilibrium. So from the low to the high, did we reach equilibrium? No, we did not. We have not quite touched that 50%. All right, we did not quite touch that yet. So we need to come down a little lower. And this is not just going to hit the 50% or 61.8. It's going to fill the gap, potentially hit this weekly 50 MA as well. But let's say it breaks this. Well, as long as we don't break this last low, we're still good for buys. And we do have a little bit of inefficiency. I believe it's on the monthly time frame. We do have a little bit of inefficiency. Or no, we don't. Maybe it's just a sponsor candle. We could come back into this monthly sponsor. We never mitigated out of this. So we could easily break this, mitigate this sponsor, and then go up. All right, for a monthly time frame intersection of this EMA. So this will come down, EMA will come back up, and we'll probably, if we can intersect around here, if it breaks this gap, then we can expect a huge bull run to the upside. Alrighty, so that's that. Let's go down to the daily time frame. Now this is where your structure comes in. Well, structure comes in everywhere, but this is more identifiable, so you can see what's actually going on with the lower lows and lower highs. So lower low, lower high, lower low. People were looking to buy this pair when we broke out of this descending wedge. All right, they were looking to buy it. They were like, "Oh, U.S. CAD bulls, we broke out of it, pulled back, go long." No, as long as sure, if we close above this level, sure, then we'd be going long. But we didn't. We never did. All right, so I'm going to delete this really quick, and I'll go back to the daily. As you can see, we never closed above this high here. We wicked above it, taking liquidity potentially, but we never closed above it. We are still bearish. All right, so now scaling in again, 4-hour time frame. All right, so this is more of a top-down. I'm not giving like entries. There are entries in here. There are entries down here. I'm not going to be giving those out. This is more of a top-down for you guys to see exactly what I look for. So now we are still bearish, all right? So we would be wanting to sell, so looking for some buy to sell move to target downside price, all right? So you can see that price finally stopped around this region here, creating equal lows. Price, obviously there's liquidity below here. We're going to be taking those out, all right? So now we pull back, all right, into premium levels. Premium as in above 50%. This premium pricing. This is discount pricing. Always want to be selling at a premium. Want to be selling at a high price. Who wants to sell at a low price? Nobody. You want to be buying at a low price, but selling at a high price. So selling at a premium here. As you can see, price pulled back. We started to go long again, but we never closed above it. Never closed above the body closure. We wicked above it, taking liquidity, but we ran back to the downside. See, this can be quite confusing because you can see that we did close above it on the 1 hour. But what did I tell you before? 4 hour always trumps 1 hour, or really higher time frame trumps lower time frame breaks of structure. So we got the push to the upside, taking liquidity. Again, I'm not going to go into entries or anything in here. But then we push back to the downside, all right, breaking the structure in here. All right, and now that we have always been bearish, we can look to be taking out these lows. So where do we enter? Again, we don't want to be selling in here. Scale into the 1 hour. All right. So for the here and now, trend line, again, don't trade trend lines, just use them for structure purposes. We broke this trend. All right, we broke the structure in here. So this was the last swing point that made a high, or really equal highs. Not really equal highs because we took it out on a higher time frame. We wicked it and we pushed back to the downside. But this is the last swing point. So now we want to come back up and retest it. Well, a lot of people would say, okay, retest the structure point and then go short. But for me, I would have to look at something a little bit more in depth on this, because I'm not going to be wanting to sell in here. Because let's say price just decides to reverse from this level. Doesn't go any lower, it decides to reverse. We pull a fib from the high to the low. Like I said, we never want to be selling at a discounted price. We want to be selling above the 50% at a premium. But the structure's right here. Well, what do? Well, here's the thing. Either you do this. Either you wait. Again, this is where counter trend comes in. You either wait for price to create higher highs and higher lows in a lower time frame, potentially hit this level or whatever, and then break structure on a lower time frame to then pull back, stops above the highs, then you can go short. Or because there's no inefficiency or no sponsor candles in here. I mean, there is inefficiency, but there's a lot of inefficiency on a higher time frame, so you're not going to know where exactly to enter. You simply just wait for, again, that same thing, for price to come up, price to hit a fib level maybe into premium pricing. Oops, let me just do this again. Because price creates a lower time frame trend or a higher time frame pullback, you know what I mean? So all we have to do is wait for that structure to be broken, pull back, short it, stops above the highs. Or what you could do is simply this. And this kind of goes hand in hand of what I just did. Price comes up, price starts to stall, creates liquidity, price pushes up, takes the liquidity, leaves a mitigation, leaves us buy, and then we sell off, breaking the structure here, pull back up, mitigate out of this position, then we fall, stops above the high. All right, then we'll be looking to target 1, equal lows where we stop, 2, equal lows of a higher time frame, 3, potentially a extended fib in here to take out these equal lows. So that's smart money. That's what you do. One, if you don't know exactly where we will stop, in here, if we don't know exactly where price is going to react from, we can use this kind of little trick. Look for liquidity runs, look for breaks of structure on a lower time frame, but this is how we trade at Ariel FX. I hope this made sense. If you have any more questions, or if you have any questions at all, please feel free to ask. We're always here for you guys. If you would like to get in on these signals and analysis that we do, please hit us up and we'll be glad to help you through your journey. And we'll be glad to mentor you and get you signed up for VIP. We do host bi-weekly webinars on Sundays for the free members, or really for any member that wants to join, and then Wednesdays for the VIP members. We do hold one-on-ones for all new members that would like to join, just to get you refreshed, get you integrated in the kind of concepts and teachings that we are trying to instill in you guys. We're open to any question, any concept, any unfamiliar concept or information that you are, familiar with, whatever. We're happy to go over that with you. So yeah, that is all I have for you guys. So hit us up if you'd like to join. But anyways, I hope you learned something. Hope you enjoyed this video, and have a great day. I'll talk to you guys later. Thanks, guys.